Get the money out.
There are recent developments that concern a few banks.
It's a black week for the American financial system. In just 48 hours, the banking sector has been shaken by the collapse of two major banks. Most worrying is that these banks serve two so-called growth economic sectors, the tech sector and the cryptocurrency industry. Silvergate served the cryptocurrency industry, while SVB was the bank for Silicon Valley tech startups. SVB Financial Group is the lender to Silicon Valley startups. It failed on March 10, falling into the hands of the FDIC. The federal agency has taken control of the banking company, reviving the ghosts of the 2008 financial crisis. Here the communication: Silicon Valley Bank, Santa Clara, California, was closed today by the California Department of Financial Protection and Innovation, which appointed the Federal Deposit Insurance Corporation as receiver, the federal agency said in a news release. All insured depositors will have full access to their insured deposits no later than Monday morning, March 13, 2023. The FDIC will pay uninsured depositors an advance dividend within the next week. Uninsured depositors will receive a receivership certificate for the remaining amount of their uninsured funds. The FDIC is a guarantor for bank depositors. At the end of last year, SVB had $209 billion in total assets and $175 billion in total deposits. SVB becomes the second biggest failure of a U.S. bank after Washington Mutual in 2008. SVB was a central player in the innovation economy. It was the backbone of the tech industry in Silicon Valley. It played an important role in the startup ecosystem by providing specialized financial services, industry expertise, a valuable network, and a strong reputation. It also offered a range of financial services tailored specifically to the needs of startups, such as venture debt, corporate banking, and asset management. These services are designed to help startups manage their finances, optimize their cash flow, and scale their businesses. SVB suffered from the rise in interest rates from the Federal Reserve because it hurt the value of its investment assets, especially bonds. As a result, the bank had to resort to a capital raise as many startups withdrew their deposits from the bank since they were burning a lot of cash. SVB had to sell bonds, primarily U.S. Treasury securities, at a discount to cover these withdrawals. The rise in interest rates has made existing bonds less valuable. In selling these bond positions, SVB had to take a significant loss. But its attempt to raise $2.25 billion failed. 2 days earlier, Silvergate, a crypto bank, collapsed. The bank was where most of the big crypto firms went because traditional banks did not want to do business with them. And that reluctance stemmed from warnings from regulators who consider the crypto industry a risky sector. The company said on March 8 that it intended to wind down operations and voluntarily liquidate the bank in an orderly manner and in accordance with applicable regulatory processes. It added, in light of recent industry and regulatory developments, Silvergate believes that an orderly wind down of bank operations and a voluntary liquidation of the bank is the best path forward. The Rabadalajala Bank was due to pressure from regulators, in particular the Department of Justice, which has opened an investigation into its business relations with the empire of the former crypto king, Sam Bankman-Fried. Bankman-Fried has been charged with 12 counts of fraud, stemming from the collapse of his crypto empire, the cryptocurrency exchange FTX, and its sister company, Alameda Research. Silvergate was established in 1988.
You might be detained if you stepped foot into the U.S.?
I don't believe I would be, but I haven't done a deep dive into that. At some point,
the question now is whether other U.S. banks will fall. Could SVB and Silvergate's issues spread to other regional banks, especially since suspicion can lead customers to rush to these banks to withdraw their money? The economist Peter Schiff tweeted, "The U.S. banking system is on the verge of a much bigger collapse than 2008. Banks own long-term paper at extremely low interest rates. They can't compete with short-term treasuries. Mass withdrawals from depositors seeking higher yields will result in a wave of bank failures." Now we should all remember what happened in 2008 just to understand the behavior of these individuals who are still admired. Now you've got to learn something from all these events. You have to wonder if your money is safe in your bank. Yes, you have to study a way to preserve your capital. Why? Well, observe what's happening around us. The central banks of many countries are adopting questionable economic policies to control inflation due to the same banks that printed enormous amounts of money during the pandemic crisis. You hear about stock and commodity prices spiraling out of control, layoffs spreading across various countries, and banks creaking. I have already uploaded a video in which I talk about the Credit Suisse case. In addition, governments and central banks are about to adopt alarming plans. These are central bank digital currencies that they pass off as a monetary anchor for digital innovation, but avoid telling you that they are programmable currencies. So somehow the economic and banking crises we see are well accepted by the gentlemen who still remain in those seats. I don't think it will end here. While you've reached the end of the video, if you are interested in learning more about similar topics, here you will find other really interesting videos from the channel. Thanks for watching this video. Click on the like button if you enjoyed it, and do not forget to subscribe in case you didn't. See you on the next one.